In Stacking Up today, I'm joined by Todd Bubba Horwitz, who's not sweating it. He's trading it. I'm talking about Under Armour.
Got my cold gear on.
Welcome back to the show as always.
It's great to be here. I got the cold gear on. I'm ready. I'm going to put the nylons on. I'm all ready to go out, and I want to go out and do some athletic events because I think that certainly Under Armour's earnings yesterday a pretty big miss, and the stock is getting clobbered. And I think what you got to look for here, this is a decision when we talk about investing and trading and both sides. Are they going out of business? I don't think so. I think they're really strong. They've got a lot of representation out there. I think this just is a bad and anomaly, maybe the final bad quarter for them. I think you got to be a buyer here of this Under Armour anywhere down. Now there's two versions. There's the Under Armour C and the Under Armour A, UA or UAA. Either one. One's a little bit low. The UAA is lower. The UA is lower than the other one. That one I'd be a buyer of. I mean, anywhere.
UAA had more options volume yesterday.
Yeah, because that became more of the mainstay over time.
Just so people know. So do you have an options trade? Or are you just a buyer?
I'm a buyer. I'm just a buyer, but I mean, if I were going to trade it through the option, I mean, I bought the stock. Okay, if I'm going to trade through the options, I would actually use a ratio. I want to somehow finance off some of the overall time decay, because one of the big problems in the overall market still is there's still no volatility. So we need to somehow offset the potential time decay. And I would look at using, you know, a 1x2 or a 2x3, showing representation of owning the stock. And you could use, let's say, the $20 level, sell the 20 by the 21, something like that, in that range. I mean, again, I don't have the specific trade for that, but that's what I'd be looking to do. I'm personally, at this level, I want to buy the stock because I think I'm going to get the biggest bang right out of the stock initially.
It put a drag on Nike as well. Nike fell in sympathy.
I think so. I think, you know, look, this is part of the retail business that we have, and I think these things are starting to feel some of the heat that we didn't feel for quite a while.
Do you think we will get some more volatility in this market? It feels like it's going to pick up to me, but what's your trader instinct?
I don't think yet. I think the last couple of days were more of a profit-taking type of sell-off. There was really no real fear or panic. I think that really what's going to need to break this market into some new, exciting volatility is probably something, a geopolitical event. It's not economic data, that we know for sure because we haven't had it for so long. It'll be something that will break this market out of this range, because if we go back 60 days, we are in the tightest in history price range and volatility range in the history of the markets.
Thank you for coming on the show with all that trader information.
Great to be here.
Have a good day.
Thank you.